From Guam, Madam Chair, I've been with the hearing since 3 a.m. The sun is starting to come up out here, but it's always a pleasure to be joining you in these very, very important hearings that you call for the American people. Thank you very much. I wanted to first begin by congratulating everybody who made money on the Robinhood trade. You know, you guys found a low float, low volume, massively shorted stock, and you guys squeezed it. And I think that investors like Mr. Plotkin, large money managers, probably doubled down on their short positions thinking that they're going to win. And in the end, the massive communication networks that we have these days rallied the small to beat the large. And that was absolutely something to behold. And Robinhood made that possible. Robinhood made that possible. Mr. Tenev, you mentioned in your testimony that you've secured $3 billion in funding to address the regulatory deposit requirement situation that you faced. Where did that $3 billion come from?
Thank you, Congressman, for that question. To be clear, we were in compliance with all regulatory net capital and deposit requirements without the additional capital infusion. It was simply to provide extra cushion, allowing us to unrestrict trading and be prepared for other black swan events that might happen in the future. The capital came from mostly existing venture capital investors that Robinhood already had.
So basically, you had to further dilute your position in Robinhood in order to make sure that you secured all of your 13 million customers with that additional $3 billion.
That's correct, Congressman.
Well, that's where I have a serious concern, Mr. Tenev, because not only was your business model designed to profit off of order flow, which caused you to take extraordinary risks in having 13 million customers with access to large margin trading that facilitated the GameStop situation, but you halted buys on that stock and you allowed sells in order to mitigate the capital requirement situation, and you materially benefited from it. You materially benefited from it because it reduced the amount that you would have had to go out and raise an additional capital in order to prevent these kind of crises from reoccurring. You took from your customers in order to minimize the $3 billion from being larger than it probably would have been, because you wanted to protect your position. And that is very troubling. That is very troubling. It's very troubling that the order flow model that you built and the risk that you took on resulted in that halt. And it's very troubling that that halt also materially benefited the existing shareholders and yourself by minimizing the amount of additional capital you had to raise in order to prevent that from happening again. You basically took from the shareholders in order to do that. And that's just, I don't know what to say about that, but I think that this, Madam Chair, presents a very serious situation where we need to ensure that companies are not taking advantage of customers in this way. Mr. Tenev, you're quoted as saying in this hearing, buying increases capital requirements, selling does not. So it was something that you knowingly did. It was something that you knowingly did. It was beyond just trying to protect the existing customers. And at the end of the day, while you had to raise an additional $3 billion, it minimized that from being a larger sum. We have customers who purchased the stock who are now bag holders after the price came down because they couldn't continue going up with additional buying. And that was willful, that was intentional. So I'm glad, Madam Chair, that we've called this hearing. I'm glad that we're able to put these things on the record. And I'm just very, very concerned with the implications of this. And I really hope that at the end of the day, those bag holders get a lot more than an apology. Thank you, Madam Chair, and I yield back.
Shepard Smith here. Thanks for watching CNBC on YouTube.